Good evening to you traders, it's Mark here from the daytradingroom.com. It's 8:30 in the evening London time, Friday evening, uh, 11th of March 2011. Very few trades for me today actually. um, I only took two trades on oil and they were all before the open, and one trade on the Dow, which was the opening drive for the range fill. And I called it a day after then. I was watching the markets, seeing they were trading, but with the volatility was quite low. The Dow then started to sort of push into a trend mode. There was one set up for me, what I didn't take, which was the pullback, the cycle down after the good push higher and the oversold stochastics, but I didn't take that. Only Dow trade for me was the opening drive. I could see it was strong. We'd opened below the range. It wasn't that deep really, considering yesterday's trade. The Dow actually closed near to the lows, so it wasn't as if it was well off the close price. Anyway, I saw the strength coming in, and it was only really a bit of a scalp trade. I really lost my conviction on that trade after I'd taken it. I felt like I'd chased it a bit. I got away with it and ended up taking it out as we tagged the 11,901 level range fill. We did just pull back slightly and then gap fill, and it would have been nice to get those extra 19 points. But that was that really. Didn't feel like I had a premium entry. Didn't feel as if it was a great trade. And after as I took it, I thought I felt like I chased it a bit. So that was that. But anyway, let's talk about oil. A couple of great trades in oil, all before the market. I was watching us chug around, early on about 10 o'clock, 11 o'clock in the morning, and we just started to roll down. We rolled through this 101 level, and the volume picked up. This is the key thing for me pre-market. I don't really like trading pre-market, if I'm honest, because the volume is low compared to the sort of volume you're getting through after 2 o'clock London time. So I really don't like it so much. But if we've got a spike in volume that we got here, and we start doing over 1,000 or peaking over 1,000, then I'll have a look. But you got to be careful with the stops, because the book is relatively thin. It was very thin actually. You've just got to be a bit careful. So what did I see that made me want to take this? Well, actually, two things. The first was this drive lower through the 101 with no pullback. The first pullback was within reach of $100. Now that's a really good magnet level for it to get to. There's every reason for it to tag it. And I just also thought, if we can break the 100, then there'll be some downside, because it's so thin, the book. You can get that absolute shudder where the book just goes completely thin. You've got stop orders hitting it and pushing down. So the entry criteria for me, I just spotted this down move here, good strong volume. There's the pullback. There you can see it just was struggling to go over that level. I took a short there at 125 cents. We pushed down. I did the usual thing of scaling at 10 ticks, so it was before around here. And then what I saw on the book was very interesting. There was a large seller stepping in. He had about 70 or 80 contracts. He'd put it on the offer. A few would be nibbled, and the offer would come down. He'd then move that order down again, and he kept moving the order. Then he'd pull it, and the market would pop up a few ticks. But that's the key point. It would pop up a few ticks, but it wouldn't go much higher. Excuse me. It wouldn't go much higher. So there was no urgency to the buyers. And then the seller would come back on. So he's obviously testing the market. He would step down to see if he could get his fill. He couldn't get a fill, so he'd lift. He'd wait for the market to pop up to see if there was any buyers lurking around. And when there weren't, he'd come back on again, and that was evident actually all the way down through this move. So I held on to it, the majority of the position till under the $100. My next scale was at 99.98, So just as we tagged under, I was concerned that we'd pop back up very quickly with the book being very thin, and it could pop back up and that could have turned into a loser quite quickly. So once I got my second scale, I know I'm protected. It's a winning trade, whatever happens. Stop at break even, even with slippage. I've banked 10 cents and I've banked 27 cents. Take off a bit of commission and it's still a winner. And so I'm holding one. Then we rolled down, we rolled down, and I just tried to hold this as long as I could, being mindful of the snapback. My last exit was at 99.71, which was actually, at the time I thought a fantastic exit. Um, really, really good entry, 50 plus ticks on that on the final. And then a few minutes later, we just got that collapse. We just got a complete collapse in the book. There were hardly any bids, and the price just rolled all the way down, and it was 99.01. But let me tell you, if you look and see how many actual contracts were traded, very, very few below 40. There was some thickness here to 30, but if you look here, you see how few contracts are traded. Literally, they're just people, speculative orders in the book, and hats off to the guy who got one contract down here at 99.01. I bet when he got that confirmation through, a little ding on his computer, I bet he was happy. And even all these guys here, resting orders, they'll be very happy. But anyway, there wasn't really any chance of getting anything like this. I saw this spike down. We spiked back up really very quickly, and I took a long. But I took the long. I was at 99.49 by the time I got back in, so we're quite a way below the low, off the low, even though it was a real significant tail rather than actual genuine trading at the levels. Well, obviously it did trade down there, but it was a market order that someone had just hit in, or a stop order, or many stop orders, and that's what happened. And we put back up very, very quickly. Now, pre-market, if I'm seeing that sort of action, there's a likelihood that that is the final drive, if you like, before the pushback. So I got long at 99.49. Now, after I took this position, I thought to myself, this is pre-market, the book is still thin. There's nothing stopping this shuddering down another 30 cents before it then climbs back up. My premise was for a pull back up to the 100. That's what I had in mind. That was the obvious trade, really. I think that's the trade probably most people would have played for if they were doing that, taking a long. But as I went in, I was at 99.49. I thought to myself, this could easily do one more shudder, even if it doesn't take out that 99 low, which I very much doubted it would. There was no interest down there apart from that stray order. But it could quite easily go down to sort of 19 again quickly, and that's a lot of room to have to give it, and I wasn't prepared to do that. So I looked to exit really straight away. I was looking to scratch the trade. I got lucky and judged it okay, and it bounced relatively quickly. It popped up to the 70 level, and it just started to stall there, and I just took that as a cue to get out. I didn't want to hang around, but it's still a 20-cent trade, which is great. But I decided to, in my mind, I just wanted to get rid of it. I didn't like the trade. I didn't like the risk that trade had with it, and I only really accepted the risk. I saw the opportunity, I went in, and then when I analysed the risk very quickly afterwards, I realised that it was unacceptable, and so waited for some sort of opportunity to get out, and it popped up relatively quickly. So I was lucky enough then to get out at a 99.70. It did happen to pop back up, and it tagged the 100, 99.99. So premise was okay, but for me the risk was too much, and I had to take it out at 20 cents. But two great trades based on pretty standard setups. Just being cautious. Obviously, pre-market book very, very thin. You wouldn't want to be trading too much size. For the guys who are trading 30 contracts or so, I definitely wouldn't advise using that sort of size pre-market, because the sort of slippage you'll get, especially if you're scalping, the sort of slippage you'll get on that is going to be quite a lot. It's going to be quite a lot. But you can get away with 10 contracts or less if you're working orders. So yeah, just be a bit cautious about that. So that was it. I didn't really see much opportunity. I was tempted to take this as we dip back under the 100. I really was. I was also tempted to take this little bull flag here. We'd flagged above, we poked above the 100, held. Let's get the drawing pan out. We held, which is what I like to see. Good flag, and I was tempted to take that break there, but I don't know. I just didn't. I didn't fancy it. I didn't fancy it for whatever reason. There were a few other opportunities as well. This was probably the best one of the day. Really, we had the strength. You could see that 100 was holding. It was more than happy above it. We'd had plenty of time above it. Dipped down below it, just spooked a few out. Lovely little tail on the candle, straight back over the 100. You're in anywhere here. Risk is relatively quantified, even if you waited for this candle. And then obviously the push back to the resistance there, 40 cents. Probably heavy scale around here being the last thing. And if you had a runner on, great. If you take the full dollar out of it, pushing up to this candle would have been the perfect exit in hindsight, of course. But no, missed that. Didn't take that. So, but nevertheless, I'm more than happy with the day's trades. Three trades, three profitable. Um, happy to keep this run going. So yeah, good trading, guys. Have a great weekend, and we're back with another video on Monday.